There's a file. You don't know it exists. It has your name at the top, your tax file number underneath, and a status field that was quietly updated sometime in the last 18 months. You didn't get a letter. You didn't get a call. The Australian Taxation Office doesn't warn you when it starts watching. It just starts. And once that status field changes, it rarely changes back without a reason. Last financial year, the ATO ran compliance systems across hundreds of millions of data points. Not guesses, data. Your bank sent transaction summaries. Your employer sent payroll records through Single Touch Payroll. Your share platform confirmed what you bought and sold. If you listed a spare room on a rental app, that income was cross-referenced too. The side income you thought was too small to matter matched automatically. No human reviewed it first. A model did. You lodged on time. You used a registered tax agent. You reckon you did everything right. And maybe you did. But the algorithm doesn't measure intention. It measures alignment. When the numbers don't line up the way the model expects, the file moves to a different queue. You're 26 or 31. You work somewhere that pays by the hour. Logistics, hospitality, retail. Something where your income shifts every fortnight. Declared income, $58,400. Total deposits across the year, $63,900. The extra $5,500 came from transfers, cash jobs, a few weekend favours, money sent between mates. You didn't declare it because you didn't think of it as income. The ATO doesn't start with your intention, it starts with the deposit record. $5,500 the model can't categorise is $5,500 it flags. Not because someone suspects you, because the system can't reconcile it. That's enough. Here's what the ATO received about you last year, without asking you for it. Bank summaries, super contribution reports, payroll data, property settlement records, rental platform income statements. Not fragments of your life, structured data feeds. You claimed negative nearing on the investment property your parents helped you buy in 2023. Rental days, 241. Days in the year, 365. You claimed 100% of your mortgage interest. The deductible proportion based on rental availability, about 66%. Difference, $2,844 in overclaimed deductions. Not fraud, just math. Now your file has two triggers: unreconciled deposits, disproportionate deduction claim. Individually, minor. Together, enough to shift your risk profile from low to requiring further review. That phrase sounds calm. It isn't. It arrives on a Tuesday. Your name is printed exactly right, which somehow makes it worse. It's not a threat, it's a request. The ATO would like bank statements for 12 months, documentation supporting rental deductions, an explanation for deposits received in October, November, and February. Specific months, which means the system already looked. You put the letter on the kitchen bench and go to work. Not illegal, just costly. The response clock is 21 business days. It was mentioned in paragraph 4. You didn't notice. You call a mate who's an accountant. He says, fair dinkum, these things usually sort themselves out. They don't sort themselves out. They resolve through documentation. By the time you speak to your tax agent properly, 11 days are gone. The amended assessment lands at $9,340. Tax on the undeclared deposits, adjustment to the rental deduction, shortfall interest charge at 6.65% per annum, calculated not from the date of the letter, from the date your original return was lodged, 18 months ago. Interest that started growing before you knew there was a problem. Before the 1st of July 2025, that interest was at least partially deductible. Not anymore. Now, every dollar of shortfall interest is paid in full. No offset, no cushion. $9,340. That's 2 months of rent in most capital cities. That's the emergency fund you just rebuilt. You have 30 days to pay or object. Objecting means a formal written submission, supporting evidence, legal framing. If it escalates to the Administrative Review Tribunal, expect 8 to 22 months. A junior tax barrister in Sydney starts around $400 per hour. The dispute is $9,340. Most Australians don't fight, not because they're guilty, because the economics don't make sense. The system doesn't require intimidation. It has asymmetry. This isn't about tax cheats. The ATO's automated programs cover gig economy platforms, short-term rental apps, digital asset exchanges, share registries, payroll systems, property settlement platforms. That's not niche behaviour. That's modern Australian working life. If you drove rideshare, reported. If you sold crypto, reported. If you moved crypto between wallets thinking it wasn't taxable, still recorded. If you rented a spare room, recorded. Crypto data matching runs back to 2014-15. Over a decade of digital asset activity sits in a database. You're not being targeted, you're being processed. Legally, that distinction matters. Practically, it doesn't feel different. Your super isn't separate from this system. The ATO administers super compliance. It sees contributions promised, contributions paid, contributions late, voluntary contributions, early access claims. In 2026, the super guarantee gap is estimated at $6.25 billion annually. Nearly 1 million Australians received recovered unpaid super in the last reporting year. You might be owed money. You might also be under review. Same file, same system. You can be both at once. You've heard the line, they only chase big players. They do chase big players, but the architecture built to detect large-scale evasion runs automated processes on everyone simultaneously. There is no income threshold where the algorithm stops matching. The Top 100 program makes headlines. The automated rental property crossmatch does not. Both run at the same time. The only difference is publicity. There's a file. You don't know exactly what's in it. You know what you declared. You don't know what the ATO received from your banks, your employer, your super fund, your rental platform, your exchange. You don't know whether those figures align perfectly. The system isn't waiting for obvious fraud. It's comparing everything it has against everything you said. If there's a gap, even an explainable one, the file moves. A letter arrives on a Tuesday with your name printed exactly right. The ATO isn't broken. It's working exactly as designed. The problem is that modern working life, side income, platform work, digital assets, hybrid employment, doesn't map neatly onto a tax framework built decades ago. The gap between those two realities isn't your fault, but it can become your bill. So, before a letter arrives, check the basics. Compare total bank deposits against declared income. Confirm deductible percentages on any rental property. Download your full crypto transaction history. Make sure your super contributions actually landed. Not because you're guilty, because the system doesn't grade on intention, it grades on alignment. There's a file. And now you know how to read it.